each and like I have earlier classes, because this is a very vast chapter. Now, we have done almost 4 sessions on this in the May 2025 attempt class. So, in case you are not clearer with any concept, like I have been asking you in the earlier sessions also, please do let me know. If you want me to focus on specific topic to clear your doubts, I will be happy to take that topic through. Otherwise, we'll just, try solving more questions, and with respect to those question solving, we will do also the revision together. Okay, because in one lecture it is not possible to do all the provisions in detail. So with respect to that, you have to refer to our classes, which are there available even on YouTube as well. And whatever doubts you may have, please come forward, please ask me. In case, as I said, that if you want any specific provision that ma'am this is not clear, please write it in chat box. I will be happy to take up that. But we will start solving the questions with respect to this topic. So I'll give you a background. Let's then discuss the questions, and you need to give me the answers for respect to that questions. Okay, so first topic that we are going to start with is the minimum alternate tax, right? Minimum alternate tax is basically in respect of that, so that the companies should not avoid the taxes. So companies were distributing a lot of dividends but not paying taxes, so therefore there was a need felt to introduce the MAT provisions, right? So that the companies at least pay this minimum level of taxation. Now, what is the MAT percentage over here in India? 15%. What does it say? If my normal tax is less than 15% of my book profits. Yes, ma'am.
Sorry to interrupt you, Prerna. A very good evening, students. Here I am C. Aparna Chauhan, the faculty at Board of Studies, Direct Tax Laws. Actually, today we are going to jump with a new topic on assessment of various entities. We are going to revise these topics. And you have done till chapter 8, and yeah, deductions of from gross total income. So I think I have designed some questions for you. I have this thing, and I want you to people attempt those questions before moving and jumping to this new assessment of various entities topic. So now some students have joined, and among them, I think we can share. Students, what you say about it? Are you ready for some quiz round? Hello. Yeah, Siddharth is saying. What about others? Should we do some? Let's take some test round. I will be sharing that link to you in the chat. Okay, and you just have to attempt those questions. They are basic questions, what we have already done. Okay, okay. So just a minute, I am just sharing you this link. Is it visible? This link? Then you also see if this, yeah. You also just see, view this link and the questions. Some students are joining. I will be giving you not more than, there are 5 questions, and they are based on the topics which we have covered till date, right? On basic concepts, your capital gains, EGBP, other income from other sources, clubbing, set-off, and deductions from gross total income. That's what we have done. So there are 5 questions, 5 MCQs only. You have to attempt those MCQs. And I will be giving you now 5 to 6 minutes. Okay? When you finish your this MCQ, just give me a, give your hand, just raise your hand. Uh, Deba, Brita, I have given you some link on the chat for a quiz round just. You please do that, then we will move to our assessment of various entities topic. Please attempt those MCQs.
Regarding my mind, it's not clear to go down that word, but I think the additional identity number. I remember medical एक नंबर लेना है
Have you all done?
फिर मेल पे आया तो मेल पे नहीं आया मीटिंग टू द
Prerna, can you just stop sharing your screen? I will share the screen of the MCQs.
Sure, ma'am.
Let's start these MCQs one by one, right? And you have, I think most of you have done. I have received a response from Siddharth, Priyanka. What about others? Smriti also I received. Good, very good. So, Priyanka, Smriti, let's discuss the first MCQ.
Yes, ma'am.
Yeah, let's discuss it. Just. Yeah, the first MCQ is Mr. Dev declared 10 lakh as unexplained cash credits under Section 68 during assessment. What is the total tax payable? Why? What happened to Priyanka and this Smriti? What would be the tax rate in this case? Siddharth, you have done correctly. Can you explain it? It's an unexplained cash credit. What would be the tax rate in that case? Unexplained cash credits, unexplained expenditure, unexplained investments at fixed what rate? 60%? Some have thought of, I think, 30% also. Other than this 60% rate, there is a fixed surcharge of 25%. Am I right? Yes, Siddharth has done it correctly. It's 78%. Why it's 78%? Because 60% is the tax rate. On that, 25% is the surcharge rate that is fixed. It is not dependent on your total income and anything. And then 4% cess. So total amount comes to 78%. Accordingly, the answer would be 7,80,000. It's a very, very simple question. But you have to definitely remember these rates, right? And then what about the second question? What is the response on the second question? Let me see. For the second question, most of you have done correctly. Priyanka also done correctly. Siddharth is also done correctly. But what happened to Smriti? Smriti? Just a minute. So here there are sales listed equity shares. Right now there is an amendment. I think that was very clear to all of you. That there was an amendment from 24th of 23rd of July. Is it? So here he has sold these shares
23rd
on
July 24 is the crucial date to be remembered.
Yeah, that has to be remembered. And then 1,25,000 exemption is available to both the cases, even if you sell the shares before this date, right? So accordingly, from this 1.8, the for this date, right? This is applicable for irrespective of the date of sale. This 1.25 lakh exemption is applicable. Accordingly, what would be the long-term capital gains would be taxable? And the rate would be 10% since they are sold before 23rd of July. Is it? Is it clear? 1.8 lakhs at tax slab rates. Who has written? Smriti, I think. And what about the next question? Siddharth. In this next, this is again on based on the amendment, right? In case of board, if the things are bought back, the shares are bought back, then what will happen this time? Earlier they were exempt, but after 1st October 24, 1st October 24, on or after 1st October 24, if the company buys back the shares, then what will happen? They will not be exempt in the hands of shareholders. They would be taxable as dividend, as dividend under section 222.
Ma'am, it so happened that in the previous question, even though I was aware of the amendment
That's
in
the
place,
thing,
but I was
because
hurriedly answering it, keeping in mind the time thing. So that's the reason I made this error. That's it. Or else I was aware, very much aware of the
yeah,
provision, but
that's the
then
thing, yeah, because during the exams, that's why I have come out with these questions. And whenever you are attempting the MCQs, because I already informed you in the first class that we had a discussion. In MCQs, if you have gone wrong, then you are not going to fetch any mark. So you have to very extra careful. These are very simple questions. I have just brought, just brush up your, amended portions, amended provisions. That's why, right? So in this question again, it's a very simple question. I think most of you have done it correctly only. And in this case, whatever be the amount the company is paying for buyback these shares of 20 shares at 1060 rupees would be deemed dividend income and would be taxable under that other sources. But what will happen about the cost of acquisition? That cost of acquisition will be treated as a long-term capital loss. It depends on the period of holding. It's always not long term. It depends on period of holding, right? You have to see what is the period of holding accordingly. So it can be short term capital loss also. It can be long term capital loss also. In case if you have sold another shares or whatever be the if you have another long term capital gain, that amount can be adjusted. This amount can be adjusted against it. Otherwise, it will be carried forward to the next subsequent year. Okay, that's a very easy question. Then it's another question is very interesting. How many of you have done correctly? Let me see. Just a minute. Most of you have done it correctly. Yes, it's a Reliance case law. It's based on a Reliance case law, right? And there it's very clear that the amount, what would be the amount? It would be whole of the deduction. Matlab, if there is a profit from an eligible undertaking, that would be considered as a in also it is only the source of income, and accordingly no loss would be can be set off against it while computing deduction, right? So accordingly the correct answer would be B only. Okay, this is very easy. And then another one is, one of you have gone wrong. See, sale of finished goods definitely will be eligible for this deduction. Profits, it's profits derived from the undertaking only. And however, the sale of import entitlements and duty drawback are not considered as derived from the undertaking. Accordingly, they will not be qualified for the purpose of deduction under section ICAI, right? But this interest from customers again will be eligible to be allowed as deduction. So accordingly, 5 lakhs from sale of finished goods and 40,000 as interest from customers would be considered as for deduction purpose, right? Accordingly, the correct answer would be C. Okay. So yeah. So I think hope you have done, and this link is available. Those who have not attempted it, please attempt those questions, and I will be getting the feedback. Rest assured ki just to I will be coming out next year time also with some MCQs to just brush up what you have, just revise it. And those would be very simple MCQs. They are definitely going to be answered the application oriented MCQs, right? These are application oriented, but you have to be very careful while attempting those MCQs, and just go through whatever ma'am is teaching you during a day. Just go and revise the concepts with the help of the questions given in your publications, whether it is MTP, whether it is case scenario based, whether it's your study material itself. Do solve those things, right? And I think Prerna, you may continue. We have already spent 20 minutes and you have a very short span of time, I know.
No problem.
Master, thank you so much for
Yeah,
taking up this bunch of questions for us.
yeah, thanks a lot. Yeah, Prerna, you may continue. And those
Thank you,
students
ma'am.
who are, viewing through the recorded session, please do join through the Zoom link. Only then you will be able to answer these MCQs. I will be getting your responses, right? So you are advised to join through the Zoom link. Yeah, Prerna, you please continue. Thank you so much.
Thank you, ma'am. Yeah. So first, people, as we were discussing with respect to the mat, let me just, share my screen. Yeah. So as I was talking to you, if your normal tax is less than 15% of it, then in that case, MAT will become applicable. And for the applicability of the MAT, then the book profits will be your starting point, right? What are the exclusions from the MAT? So the companies which are opting for 115 BAA, 115 BAB, life insurance, tonnage tax companies, to that companies MAT is not applicable, right? Then if a foreign company is a resident of country with which India has a DTAA, and it doesn't have a PE in India, again, MAT is not applicable. If a foreign company is a resident of country with which India is not having DTAA, but this company is also not required to get any registration under the company law in India, MAT is not applicable even on that foreign company. Or foreign company having the business income under 44B, double B, BBA or BBB, right? Now, how do you start the computation of the book profit? You start with the net profit as per your profit and loss account as per the Companies Act, right? You add or less certain adjustments. So adjustment with respect to the income tax. So you add back the income tax, any provision, any income tax paid, any interest on income tax, any surcharge, cess which is there, all those need to be added back. Deferred tax, add or less, depending on whether it is the deferred tax or the deferred tax credit which is there. Here, you will not add the penalties amount, right? Under the normal income tax, penalties on the income tax or any other penalties get disallowed under section 37. Here, it will not get, 1 second. So here you will not get any disallowances under section 37. As you know, you have it under normal provisions, right? Here, therefore, penalties will not be added. So only whatever the specified adjustments are there, student, only those adjustments will be there with respect to the calculation of book profit. Now, you can't apply the normal tax adjustments over here. Then any amount which is transferred to the revaluation reserve or any reserve, so any amount debited or credited will be adjusted over here. Any provision for unascertained liabilities will be added back, or the provision amount which is credited in case the amount is withdrawn from that provision, then that will be accordingly adjusted. So here they are only talking about the unascertained liability, right? If it is an ascertained liability, then in that particular case, the provision for a certain liability will be allowed, right? So if you see, the provision for gratuity is an ascertained liability, right? Because here you can measure based on the actuarial valuation, you can measure the gratuity provision, right? So therefore, it is not an uncertain liability. What is the ascertained liability? Which can be measured, which can be quantified, which is certain that there will be payout, right? So that will be allowed under MAT. But if you look under the PGBP, whether provision for gratuity is allowed, the answer is no. Provision for the gratuity under 40A7 is not allowed, right? Now, provision for loss of subsidiary company, you will add. Provision for diminution in the value of asset, any revaluation that you do, add. Dividends paid or proposed, you will add. Depreciation as per the books of accounts, you will add, which will also include the depreciation on the revalued asset, and you would reduce the depreciation as per the books of account, excluding the depreciation on the revalued asset. So in effect, what is the effect that we are giving? We are just adding back the depreciation on revalued assets, right? So the add or less disclosure has to be like this, but here you are not reducing the depreciation as per the Income Tax Act. You are only reducing the depreciation as per the books of account, but only excluding the depreciation on revalued asset. Add or less any income exempt and the expenditure in relation to that, right? Share of assessee in the income of AOP or BOI. Notional gain on the units of the business trust, because you will allow the actual gain or loss on the units of business trust. Royalties taxable under 115 BBF. Under 115 BBF, royalties are taxable at 10% at concessional rate. So now if I apply MAT, obviously it will get taxed at a higher rate. So I will add or less the royalty income and the expenditure in relation to that, right? Income of foreign company, which is royalty, FTS, dividend, interest, which is taxable under 115A at a lower rate because of the Act or DTAA, then in that particular case, if it is taxable at a lower rate, lesser than 15%, we will add and reduce the income and the expenditure in relation to that. Brought forward losses and UAD, if it is a company which has applied under IBC insolvency, then aggregate of UAD and business loss is allowed. If it is other company, then lower of UAD or business loss is allowed, right? MAT credit will be your MAT liability minus the normal tax, and the MAT credit can be carried forward for 15 years and can be set off against the normal tax liability in the future years. Fine. Now, MAT for the NDS compliant company, there is a little additional step. What is the additional step? What is the additional adjustment? You will add the amount credited to OCI in the PNL, which are classified under the head income that will not be reclassified to PNL. For the head income that will be reclassified to PNL, you will not give any effect, right? And you will reduce any amount debited to the PNL under the head income or items that will not be reclassified to PNL. You will not give any adjustments for the revaluation surplus for asset, even if they are classified under OCI. Gain or loss from investments in equity instrument designated at fair value, because that's a notional gain or loss. In the year when the investment is actually transferred, in that year we recognize the actual gain or loss, right? So these items will be ignored even if they are put under the heading not to be reclassified to PNL. Shareholder related adjustments. So you will add any amount debited to PNL on account of distribution of non-cash assets to the shareholder, which is the difference between the fair value and the book value. And you will reduce the amount credited to PNL, right? So this is particularly in the books of the shareholder, when the shareholder will get that assets, non-cash assets, on account of the demerger, right? On account of demerger, they may get certain component in cash. They may get the certain component as the shares of the resulting company, right? So when they record the shares of the resulting company, when the recipient company, the shareholder is a company, in that particular case, if they follow Ind AS, they have to adopt the fair value, right? And not the book value or WDV in the books of the resulting company, right? So the fair value of shares minus the book value of shares, the amount debited or credited will be made an adjustment under OCI. And finally, 1/5 of the transition amount. Now, what is transition amount? The amount appearing in the other equity, excluding the capital reserve and security premium on account of transition from AS to Ind AS, right? Again, you will not here consider amount adjusted under the head amount reclassified to P&L, revaluation, notional gain or loss on investments, or notional gain or loss on plant property equipment or intangible assets which are designated at fair value, the adjustments relating to the investment in subsidiary if it is there is notional gain or loss in relation to that, and differences relating to the translation difference of the foreign operation, right? So this you will exclude it. Now let's do one thing. Let us solve the question in relation to the Ind AS compliant company. Now, this is a past exam question which I have listed over here. You are required to solve and start giving me the answer. Okay. ABC Limited, an Indian company engaged in pharmaceutical formulation in Tamil Nadu, started adopting Ind AS with effect from 1st April 2022. Following particulars are furnished for 31st March 25. Book profits after adjustments of all the items specified in the 115GB amounted to 52.26 lakh for the year ended 31st March 2025. This is except for the adjustments of the brought forward losses. Brought forward losses as per the books of accounts, rupees and lakh are given for 21-22 and 22-23 along with the UAD. The business loss of 4.6 and 1.75 have been deducted while computing the book profits for the financial year 21-22 and 22-23 respectively. The particulars of OCI for the year ended 31st March 25 are given. OCI that may be reclassified, OCI that may not be reclassified, and there is a transition amount as on the convergence state stood at 52.50 lakh credit balance including the capital reserve and the adjustment of 4.5 lakh relating to the translation difference in foreign operation. NCLT has admitted the application under 7 of IBC made by the financial creditor on 31st March 2024. Assume the income tax liability is 9.2, compute the MAT liability. So let us start with the first thing. Here the book profit is given 52.26 lakh. So we have the book profit. We don't have the net profit. We are directly starting therefore with the book profit. Now what about the brought forward losses and the UAD? Both will be deducted, Siddharth. Okay. Anybody else has any other answer? Since the entity is undergoing insolvency, you are right, Siddharth. But let us read it very carefully. The question which is given. Go through the question again with respect to only this point 2 which is there. Yes. Yes, students, I'm waiting for your answer. How much will be deducted? Both will be deducted. You are correct. Technically, that's the correct answer.
Principally, if you go, both have to be taken, the aggregate of both. But here in this case, only the effect of UAD will be given,
Yes.
as this has been already given effect to brought forward
Correct.
losses.
Correct. So, Siddharth, see, here you have mentioned 4 point, I think it's 6, not 9. Okay, 4.9 and 2.2 plus 7.1. What is 7.1, Siddharth? 4.9 and
That should be the
2.2, I can
total of
understand.
both the
Okay.
figures.
Yeah, I see.
4.9 plus
Yeah.
2.2.
Okay. So basically, if you see the business loss of 4.6 and 1.75, which is there, is deducted in the year 21-22 and 22-23. Now I can't go back and revise my returns for those years. The timeline has already expired. So once I've already got the deduction in those years, I cannot again really deduct it. Fine. So now ideally both should be allowed because the NCLT application has been admitted with respect to the insolvency proceedings, right? So, or insolvency proceedings are admitted. But here, since the amount has already been deducted in the particular years, now I can only get the deduction for the UAD, right? So in this particular case, what will happen is only 1 second. Deduction for this will be allowed. And even in this, right? So business loss not allowed as already deducted. Are we clear? Now coming to the OCI. The particulars of OCI for the year ended 31st March is given. OCI that may be reclassified to P&L. What will happen in that case? Yes. Yes, Siddharth. Yes. Only non-reclassifiable needs to be considered. That's right. Yes. So basically, OCI that may be reclassified to P&L will not be considered. This is what I told you over here, right? If you look at here, what did we just discuss? That no effect for items that shall be reclassified to P&L.
So
So
that
for
will be
this
completely
entire
ignored.
thing, yes, this is to be ignored. Can anyone tell me the reason for this? Why this is ignored? Yes, any reason? Can anyone give me this reason? See, this is ignored because this, what is OCI? Okay, let's first discuss about what is OCI. Yes, because it will be taken to the P&L in the year of reclassification. Yes, Siddharth. So, OCI is basically the other comprehensive income. It's something as a statement which is prepared other than P&L, right? Now, the items that are put under the heading that may be reclassified to P&L, this will eventually go to the P&L, right? So therefore, we are not considering them today. Fine. Now, what about the items that may not be reclassified to P&L?
The incomes will be added and the expense side will be okay. The debits will be deducted and the incomes such as deferred gains and that will be added
Yes.
when it
So,
comes to.
correct. This will be added back when it comes to basically the items that may not be reclassified, because now we are going to reclassify this ever. Okay. So we are not, since we are not going to reclassify this ever, the companies may, start shifting the profits from the P&L to the items that may not be reclassified, right? So from here, if any income is hidden from the P&L and going to this heading, therefore the MAT provisions or book profit adjustments are now provided to add this. But we will not
Ma'am,
add any notional gain or losses. What we will add is the actual gain or losses which are there. Yes, please.
ma'am, in this case, that is OCI that may not be reclassified to PNL. The reason behind that we are giving effects to these is that to these adjustments are that there is a possibility that these items may get shifted from PNL to OCI. Is that so?
Yes, yes, that's right. That's the exact reason.
Okay.
Yeah. Changes in fair value of equity will not be considered. Yes, Siddharth. So changes in the fair value of equity instruments will not be considered. What is the reason for that? See, we have written here gain or losses from investments in equity instrument designated at fair value we will not consider. Now, why we are not considering? Because this is notional.
On notional
So,
basis.
correct. This is to be therefore again ignored. Deferred gains on cash flow hedges. Whether we will consider? Yes.
Yes, it will be added back.
Correct. So this is in my credit, right? So any amount which is credited to my OCI will be added because this is in the nature of income. Now they have not said that we can exclude this amount. So we will add this particular amount. So we have deferred the gains on the hedges that we will add. Deferred cost of hedging of deferred cost of hedging. Yeah, that's the one thing. Deferred cost of hedging. Even we will consider this, right? So here, this we will reduce it. Isn't it? Now, share of OCI of other associates. What we will do? Will be considered, Siddharth? Yes. Because again, is there a specific exclusion for that? The answer is no. Only the exclusion is for revaluation surplus and gain or loss. Right? So we will reduce this. Right? We will reduce this. Share of OCI of my other associates because I'm preparing the consolidated financial statement. Remeasurement of post-employment benefit. will be considered? Yes. Even this will be considered because there is no specific exclusion. Yes, Siddharth. That's right. Finally, revaluation surplus of assets.
Is an ignored item.
Correct? It's an ignored item. So we will ignore this. Now, when you look at this sum in the examination, when the first time it came after this Ind AS was introduced, students got really scared because they were thinking कि ये सब क्या items आ गए. Is it the sum? Is it like a scarier sum if you have studied or known the concept? Is it scarier to you now? Yes.
Now it is not, but at that time
Yeah.
it must have been, of course.
Yeah, it must have. So if you see the questions that could be asked in examination as students, anything can be touched upon. But what you have to be sure is that you need to understand the concept well. This is what there is a problem that we even face once you qualify as a CA. Now you would have studied some concept, but you have not understand or you have not, thoroughly understood its implication that how or why we are doing that. That is important. Like we discussed right now, ki OCI that is reclassified to PNL, why we are not adding. Now, once you understand the logic, any kind of question that may come, you'll be able to handle it. But if you're just looking, you're not understanding, first of all, this concept may look very heavy. You may think that this we will have to remember in the examination. So you will try to mug up the things, but that will not help because then you will end up making the mistake. Because if you mug up anything and under the tax law specifically, you will not be able to apply. Right? So you have to be very sure of, how it comes. Like, for example, I'll tell you a practical instance. Okay. Yesterday, I was preparing a salary structure. Now, in that, there were so many different components that we have to think about that, whether in the new scheme we will get the deductions or whether these perquisites will be considered as tax exempt. For example, the driver allowance, for example, the HRA, for example, the food coupons, right? So there are different things that you need to consider. Now, once you arrive at that, you have to also be careful that when you structure, there could be, like the PF, the NPS total should not cross 7.5 lakh, right? Now, when you come to the final answer, you may, think that if you're showing it as a salary, you get HRA. But if it is not salary, you still get 80 double G deduction for the rent paid. Isn't it? Now, in exam, these kind of practical questions can come. So if I show it as a business and if I'm paying the rent, you get the deduction under 80 double G. Right? Then in particular case, you have to see whether you are giving the marginal relief or not. So just small final points even in the practical life. So only if you are very clear, if you read the law properly, you'll be able to answer. Right? So don't get scared in the examination. Think about it very calmly, very patiently that what could be the solution. There has to be a solution to any question. During the exam time, since we are under so much pressure, we tend to make more mistakes. Right? But you have to be very calm enough. It's difficult. I mean, doing it is very difficult than just, saying it merely. But all of us have gone through that process. And I think that's the only key to clearing those exams, right? Now, the transition amount as on the convergence date stood at 52.5 lakh credit balance, including the capital reserve of 8 lakhs. An adjustment of 4.5 relates to the translation difference in foreign operations. Yes, Siddharth, it will be taken to the PNL in the actual year of sale. That's the reason why we are not considering the revaluation now. $40 lakhs divided by 5. So we will reduce, you are saying the 8 lakhs as well as the 4.5 lakhs. Isn't it? So if you see what we have said is that the transition amount 1/5 have to be considered. So amount appearing in the other equity, excluding the capital reserve and security premium. And in the other equity, you have to exclude the differences relating to the translation of foreign operation. That's correct. Now 40 divided by 5, you will add or you will reduce. What would you do? So this is correct that this will be 52.5 minus 8 minus 4.5. This gives me 40 divided by 5, so 8 lakh. This we would add or reduce. It's credit, so therefore we will add. That's correct. So this is to be added.
Added credit balance number.
Correct? Fine. So is this question clear to everyone out? Yes? Now can you calculate the total book profits for me? And the MAT liability? Can you calculate the total book profit for me? I'm putting here. Yes, I can scroll down certainly, Siddharth.
The book profit comes to 63.96 lakhs.
63.96 lakh. Yes, that's the right answer. And what is your MAT liability coming to?
15% of this will come to 9.594.
Hmm. Yes, then what about the education cess? Yes, Siddharth. We
Education
have
says
to,
always comes, always applies.
yes. So you have to add the education cess and the difference between that and your income tax liability, right? So this is more than your income tax liability. So obviously MAT will be applicable, but the difference between the two will be your MAT credit, right? That will be your MAT credit. And this you will utilize against the normal tax liability in the future year. Yes, you will carry it forward for the period of 15 AYs. Are we clear? Is this question clear to everyone? Any questions, any doubt? Yes? Anything we have not understood so far? Fine. Okay, let's solve then one more question. Yes. ABC Private Limited, incorporated on 1/11/2024, is engaged in the manufacturing of footwear and has set up a factory in the Northeast. It has reported a net profit of 80 lakh for previous year 24-25. The following items have been credited or debited to P&L. Contribution towards the research association eligible for deduction under 35(1)(2) for 2 lakh. Expense towards in-house R&D of 2 lakh. Depreciation as per books 40. Received from patent developed and registered in India 10, and the expenses are 1 in connection with that royalty. STCG on transfer of listed equity shares on recognized stock exchange 10. Asset acquired and installed during the previous year, plant and machinery 1 crore and 20 lakhs paid in cash. Building 50 lakh. Company has employed new employees to whom the salary paid was debited to the P&L, details of which are given here under. Fine, so let's start one by one. Here you have to compute the tax liability. Fine. So first of all, how will you start computing the tax liability? Which provisions to be look out for? Yes. Yes, Siddharth, that's correct. Whether the entity has opted for the concessional regime or not. Right? Now, here there is no information given. So, what is the regime that could be applicable to it, the concessional tax regime? What concessional tax regime will you select, or which one you will select? 115 BAB, yes, or 115 BAA? Which one we will select? Let's go to our basic concept class, isn't it? What did we discuss there? For the manufacturing companies, it is 115 BAB. For the normal companies, it is 115 BAA. So it's a manufacturing company, right? In the first line itself, it is mentioned that the company is engaged in the manufacturing of the footwear. Right? It is engaged in the manufacturing of the footwear. So we can select here 115 BAB. What is the tax rate here? What is the tax rate? 15% plus surcharge of 10%.
Surcharge of 10%.
Right? Plus the cess of 4%. Making to 17 point, how much? 17.16%, right? Now you have to evaluate here between the normal tax, this question which is there is related to the
comparison has to be done.
Correct. So normal tax versus the MAT, this is 1 versus 115 BAB. This is 2. Now versus MAT, because here the question does not explicitly tells you to ignore MAT. So in the exam, only when the question tells you to ignore MAT, only then you need to ignore MAT. So first I will make a comparison between the normal tax and the MAT, because if my MAT is higher, then MAT will apply. Right? Then I need to compare with 115 BAB, because if I go for 115 BAB and if my MAT is higher, the comparison has to be between MAT and 115 BAB. If normal tax is higher, then the comparison has to be between normal tax versus 115 BAB. Right? Now, under 115 BAB, if I go for 115 BAB, will MAT be applicable? Yes. If you go for 115 BAB, whether the MAT applies in that case?
No.
No, right? So MAT is not applicable if a company selects 115 BAB. Now, therefore, the comparison will be whether the MAT is higher or my 115 BAB is higher. Isn't it? So that's how this is a classic sum which compares the two. So first we'll start with the normal one. Okay. So let's start with the normal tax provision. So my step one is the normal tax. Right? So first I will start with my book profit or the net profit. What is it? Net profit 80 lakhs, right? Now, what is the first adjustment? Contribution towards the research association eligible for deduction under 3512 for 2 lakhs. What will be the impact? Allowed. So will there be any implication?
Ma'am, 115 BAB applicable till 31st March 2024 only, no?
115 BAB. No, so that is with respect to, the starting of operations. Right? So you're right in a way that the business should be set up and registered before 31st March 2024. You are right in that way. Yes. And this is the company incorporated in 1/11/2024. Yes, you're right. This is the business which is not starting in 1/11/2024. So let us, I think there should be correction over here. You are absolutely right. 1 second. So this should be.
Yes, it defeats the condition.
Yes, it defeats the condition. You're absolutely right. So either we need to change this 1/11/2024 to 1/11/2023. But if we do that, what will be the problem? If I change the year over here, there will be one problem. What will be that problem? Can somebody point me out? If I change the year to 2023, there will be one problem with the question. What will be that? Can somebody point out? Yes.
Then 115 double J double A will not get.
No. See, this option which is there, exercise of option, has to be before the first return filed before the due date under 139(1). Right? Now, if a company is incorporated in 2023, what will be its due date for filing the return of income? 30th September or 31st October 2024, right? That will be its first return, right? We are computing the income for the year 24-25, not 23-24. Now, can it select the option in 24-25? Answer is no, because that is not its first year return. So, if a company wants to go for 115 BAA, it has to exercise the option in the first return. If it exercises the option in the first return, then the question becomes meaningless, isn't it? Right?
Yes.
Correct? So here I cannot, change the question and say that, okay, it was incorporated in 23. Because if it was incorporated in 23 and if it has not exercised the option of 115 BAB, now it cannot. So now if it cannot, question becomes irrelevant. Or if it has exercised, then also the question becomes irrelevant. So let's do one thing. Here, 115 BAB, we will write is not applicable as the company is incorporated after 31st March 2024. Right? So this again, it should strike in your examination, right? That, this is incorporated after 2024. Somebody, really pointed out correctly. This is after 31st March 2024. So 115 BAB cannot apply, even if it is a manufacturing company.
Ma'am,
Right?
if this question comes up in exam and the same error is, it has come up in the paper, so benefit of doubt will be given, or
See,
like
it's not an error
I mean,
technically. Yeah, see, I think the question that we have made up over here, we did the error in starting the question with 115 BAB, right? It was collectively my error as well, right? Because here the question deliberately has put this 11124 and has said that it is engaged in manufacturing, so that we all of us got confused with respect to that. Like, this is into the manufacturing, so automatically your mind will go 115 BAB. But nobody
hmm,
picked up the date except the one student who pointed out,
yes.
right?
Hmm.
Now, even if it is 115 BAB is not applicable, we can still therefore go for 115 BAA, right? We will therefore go for 115 BAA. So technically, this is not an erroneous question. Erroneous question
Okay.
would have
It
meant
is,
that, there's something which is technically not possible in that case. So here
okay,
they
yes,
have
understood.
deliberately given the date, they have deliberately given
Deliberately.
the value. Yeah. So it's
Okay.
a question which has been made in that fashion so that most of us will commit the error, right? So that's the intention of the question. And it's very commendable that somebody can point it out that okay, one because what would have happened otherwise, we would have solved the question. Now when you would have sit and sat down and revised the entire thing, you would have then thought about you apply here, isn't it? So that may be the reason. Okay, so now we'll go for 115 B double A. Okay, now first is contribution towards the research association eligible for deduction under 3512 for 2 lakh. What will happen in the normal provision? Sorry, allowed, so no implication. Yes, so this is allowed, so no implication. Now expense towards in-house R&D. Allowed, so no implication. Same, right? Right, so no implication. Depreciation as per books of accounts. Sorry, yes. What will happen to depreciation? Add back. Fine. So this will be added back. 40 lakhs. Fine. Next one. Royalty received from patents developed and registered in India, 10 lakhs. Add back and separately considered under Chapter 6A deduction. Will Chapter 6A deduction be applicable over here? Yes. What will be the tax treatment of this? Yes, students, this is very important to note here. There is a specific section which gets whether deduction will also apply. That is something. Yes. Yes, please. Here, there is a specific section for wife BBF which gets applicable. Section 115 BBF, which provides that the royalty received from patent developed and registered in India will be taxable at a concessional tax rate of 10%. Will be taxable at concessional tax rate of 10%. So therefore, what we will do is we will reduce this amount because this is taxable at a concessional rate of 10%, and we will add back the expenditure in relation to that because this is taxable on the gross basis, meaning no deduction for the expenditure is allowed. So this is 10% on gross basis. Are we clear? Now coming to the question whether you will get the deduction under 80RRB. So the 80RRB, you have rightly pointed out that there is a deduction which is applicable under section 80RRB, but whether that will apply, the answer is no, because this is applicable to only individuals. And what we are dealing with is the company. So this will not be applicable. Are we clear? Fine. Now STCG on transfer of listed equity shares 10 lakh. What will happen to that? Yes.
Deducted and separately sown.
Correct. So we will reduce this 10 lakh because this is taxable under the head capital gain. So my STCG 10 lakh. My royalty income will also be appearing under business only, but under a separate head. So only 10 lakh. Fine. Next. The asset acquired and installed during the previous year. Plant and machinery 1 crore and building 50 lakh. Now they have given this for the purposes of depreciation. So we'll calculate the depreciation. So my depreciation, plant and machinery and building. The actual cost is given. This is 1 crore. And the building was how much? 50 lakhs. Now 20 lakhs is paid in cash. So what will be happening?
Added back.
No, we'll reduce from the actual cost. Na? So expenditure or asset acquired in cash. So we'll reduce from the actual cost, right? This will be a capital expenditure. So it can't be added back to the P&L. This is not claimed under P&L. So you can't claim depreciation on the asset acquired in cash, right? So we'll reduce from the actual cost of acquisition of that asset. Isn't it? Yes or no? You can't add it back because if you add it to the P&L, you are adding in fact the capital expenditure to the P&L. Can we do that? Answer is no. So therefore, in that particular case, what will happen is we have to reduce from the actual cost of the asset. Are we clear? Okay.
Yes.
Now, coming to the depreciation. What is the rate of depreciation over here? What
15%.
will be my depreciation? 15% for the plant and machinery. So what is the depreciation amount coming to? Calculate the depreciation. Is there any information given that what is the date of purchase so that we decide whether it's for full year or half year? The answer is no. We don't have the date of purchase. So we'll put it, we will assume it's put to use and for the whole year it was available. So 12 lakhs, is it coming?
No, ma'am.
15%.
From
So
1st November 2024, we have purchased.
yes. So the company has started in the 1st November 2024. Yes. So we will assume for less than 180 days. So how much will be the cost? Depreciation?
6 lakhs.
80 into 15% into 1 by 2. Because this is started in November. You're right. So this will be 6 lakh. What about the other? This will be 50 into 10%. Right? Depreciation on building is 10 divided by half. This will be how much? 2.5 lakh. Isn't it?
Yes.
Yes or no? Anything else?
Yes, additional depreciation 20%.
Correct. 10%, right? Again, it will be for half year,
Yes.
right? So I will have my additional depreciation here because this is a manufacturing company.
Manufacturing
So
company.
this, correct? 80 lakh into 20% into 1 by 2. What will happen to the balance 10%?
Next year will allow.
Correct. So you will write that in your notes to exam. So what is my WDV coming to? Calculate the WDV. Yes, Siddharth, correct. 80 minus 6 minus 8. 66 lakh is the WDV over here. And 50 minus 2.5, 47.5. What is my depreciation coming to? 6 lakh plus 2.5 lakh, 8.5 lakh. Minus the additional depreciation, 8 lakh. Fine. Now, this will give you, I think there's some mistake over here. Okay, not mistake. I think this has gone. Yeah. Okay. Now here we have given the company has employed new employees to whom the salary paid was debited to P&L. Now, why is this information given?
80 double J double A.
Correct. It's for 80 double G double E. Now, will we get it for the first employee 18,000, which is there, who has been employed on 1/11/2024?
Yes.
They are into the manufacturing of footwear.
Correct. So, what is the number of days that you see?
150 days.
Correct. So, this is for more than 150. So, this is the employee who is eligible. Right? What about the second case?
Not allowed.
Because this is less than 150.
Yes.
Right? So, this is basically less than 150. So, that is the reason we are not giving him the 80JJ benefit. In the next year, if they work for more than 150, in the next year, these employees, these 4 employees will get it in the next year. Right? Yes or no? You will write these points in the exam. Don't just say that only this is eligible. Also write in the exam that in the next year, if these employees stay for more than 150 days, in the next year, the employees will be eligible for this deduction. Clear? Yes? Next case. So the threshold is exact more than 25. Exact 25 is also eligible. Clear? Next case. Siddharth, the section 80JJAA says that the salary should not be more than 25. So exact 25 will also be covered. 1/1/2024, 28,000 by check. Will this be covered?
No.
Why?
So this exceeds the
25,000.
limit.
And
Correct. This
also it
exceeds.
is given in check.
Yes.
Fine.
So basically, if you look at it, here, this is basically more than 25,000. So if that be the case, then in that particular case, we will not give the benefit over here. Are we clear? Yes. What about the last case? What about the last case?
Cash payment is not allowed.
Correct. So cash payment is not allowed. What will there be any other effect? So this is more than 10,000 in cash.
More than 10,000 limit.
And these salaries, correct? This is the amount of salary which is debited to the P&L. So what will happen? Will there be disallowance under 40A3?
Yes.
Yes or no? Yes? Why this happened like this? I don't understand. So there will be a disallowance under section 48(3) of 11,000 into 25 employees, right? And this is salary per month. So November, December, Jan, Feb, March. So how much it comes to? 13,75,000. Correct?
Yes, ma'am.
So don't make a mistake in examination of not calculating the months. So 11K into 5 into 25. 13.75 will be added. Let me, just put this properly. I don't know why this happened. All right. Anything else I'm missing over here? No? Yes? Fine. So what is my total income coming to? First of all, what is my PGBP coming to here? Calculate the PGBP. Yes, please. What is the normal income coming? What is my GTI? Yes, students. Is it so difficult to get GTI? Are you getting this answer for the GTI? Yes.
Yes, ma'am.
118.25 GTL.
Yes. And then we have the 80 double J double A deduction. This you will get it for the period of 3 years, right? How much is it coming to? 18,000 into 2 employees into 5 months, right? And 30% of that. So it comes to 54,000. So how much it comes to? My net total income is 117.71 lakh. All of you getting this answer? Yes?
Yes.
Yes, ma'am.
Correct? Now, what is the tax rate that you will apply? For the royalty, I will apply tax on 10 lakh gross basis, right? On STCG at the rate of 20%, 2 lakh. We are not given that with this asset whether it was purchased before 23rd July, after 23rd, but since the company is incorporated after 23rd July only, we are taking the tax rate on STCG of 2 lakh, right? What about the tax on normal income? What is the tax rate that we will apply?
22%.
No. This is the normal provisions that we are looking at, right? We have not gone into 115BAA. How 25%? We are not given any information about the turnover. So I understand the turnover will be zero because here the company is incorporated on 1/11/2024. So was there any turnover of previous year 22-23? Answer is no.
25%.
Right? So since the turnover was zero, which is less than 400 crores, so what is the rate that will be applicable? It will be 25%. If the turnover information would have been there, then you would have, considered based on that. But since here there is no turnover information given, so therefore, since the turnover here is sorry zero, since the company was not incorporated at that time, we will take here 35%. Since turnover was zero, right? So what will be the answer here? Yes or no? Is this the answer you are getting? Yes, correct. Now, what will be your surcharge? Because here the income is more than 1 crore. So, what will be the rate of surcharge?
7%.
7%, right? So, 3 lakh add and then 7%. Plus, you will have cess. Right? So, my total tax liability will come to, I'm not writing here the cess amount, 30.67155 lakh. Are we getting this answer? Yes? Fine. Now, this is just one part. Now, we will have to then compare it with the MAT first, right? So, the second will be the MAT liability. The second will be the MAT liability. So, what we will do is we will now calculate as per the MAT provision, right? But before that, what we will do is we will take a break. If you want, you can start solving the question. Why is it not allowing me to do it? Yeah. So first we'll take a break here of 10 minutes and then we will start with the MAT liability. Fine. Let's take a break of 10 minutes. Okay. let's take it view from the perspective of 115 JB. So let's see. Let's solve the question again. We'll start with the net profit to compute the book profit, right? Isn't it? So,
Ma'am, in the normal tax liability, I'm still not sure with the total tax liability that I have arrived at. There is a difference. So I would want to
what the
know.
amount you are getting?
I am
What is the
getting
amount?
is getting it. Give me a minute. 7% is the surcharge, right?
Yes.
So mine is coming to 30.521322.
And ours is coming at
30.67 or so.
why. Okay, yeah, this is
So
why
I would
this is not.
want to know where
Uh,
um
30.67
this
is what
is.
we are getting. Anybody else with a
Huh.
different answer? Or everybody is getting 30.67? So, up till what point you have arrived at the same answer? Is your total income same?
Total income is
245
same, 117.71.
correct?
Net taxable total income, huh? Then
Yeah,
normal income will be chargeable at 25%, which comes
correct.
to 117. 20, excluding both. On the income of 97.71, 25% will be taken, right?
On the income of 117.71 minus 30 lakhs.
Yes. No,
7.71.
it is 10 and 10, right? 10 each, no?
10 and 10.
Or,
Sorry. Yeah, it is
so
10
20
and
each. So it
10.
is, sorry, 20.
97.71.
Uh,
Yes.
so it comes to the tax liability for this normal income comes to
Correct.
24.4275.
Yeah. So I think I have made a mistake over here. So this is right. You are getting right answer, in fact. So this is 24.42
Comes to 27. Fine, ma'am.
fine.
919.
30.52 Yes, it's right. Okay, fine. Yes, Siddharth, we had not considered the deduction bill. That's where the mistake was there. Okay. Yes. Now coming to the book profit calculation, what about the contribution towards research association allowable under book profit or not? Yes,
Allowable.
allowable. So no adjustment even under book profit, right? So here, no adjustment for 115 JB. Expense towards R&D.
No
This also
adjustments. Allowable.
no
Allowable.
adjustment. Correct. It is allowable. What about depreciation as per books of accounts?
Added back.
We will add back. So let's add back over here. What you will reduce then? What is the amount that you will reduce? Yes.
Same 40 lakhs depreciation.
Same 40 lakhs? Yes, because there is no depreciation on revaluation of asset. So we'll reduce the same amount. Okay. Then what about the royalty income?
Allowed.
No. So if you remember, I just now told you, if you look at this, yes, Siddharth, we have to deduct it. So for the math purposes, if you see this, royalty taxable under 115 BBF, less the royalty taxable, which is income, add back the expense. So since the MAT is a higher tax, right? So if I apply on this royalty income, the purpose of giving that particular incentive will get defeated. Yes, Siddharth. So therefore, we will reduce this. So on this, the MAT is not applicable. Clear? So just make the adjustment over here for the purpose of book profit. So less royalty income taxable under section 115 BBF. This will be my 10 lakh and expense will be 1 lakh. Right? Next one. STCG on transfer of listed equity shares. No adjustment, right? Even if earlier the tax rate used to be less, somewhere, but there is no specific adjustment provided for this. Even if you see for long term, there is no adjustment provided for that. So here there will be no adjustment under MAT. Long term, short term, even long term capital gain tax rate is same, but they have not provided any adjustment with respect to that. Okay. What about the depreciation under income tax and 80JJBB?
No effect.
80JJAA? No impact, right? So depreciation as per income tax not considered under MAT, 80JJAA not considered. What about this disallowance in cash expenditure under MAT? Disallowance of cash expenditure under MAT?
Nothing is mentioned in provisions.
Correct? Nothing is mentioned. So no impact. Okay. So therefore your book profit will now come to, what is your total book profit after all the adjustment? How much it is coming to? Is this what it is coming to?
₹71 lakh.
How 71?
71 lakhs.
How 71? 80 plus 40 minus 40 is 0. Then minus 10. Okay, yeah. Sorry. 71. Yes. Not 35. How much MAT is coming to? Any surcharge here?
10.65. No surcharge.
No surcharge, right? So only cess will apply. And after cess, what will it come to? 11.076. Now, is my MAT greater than the normal profit, normal income tax? Yes. Is my MAT greater than normal income tax? Yes. Normal tax is greater than MAT, isn't it?
Normal tax is greater than MAT.
Yes. So therefore, my MAT is not applicable. Clear? Now coming towards the last one. 115 BAA. Again, I'll start with my net profit 80 lakh. Let's go back and look at contribution towards research association eligible for reduction under 3512, whether this is available?
Not available.
No, it is not available. So, if you look at this particular section, so scientific research deduction under 35, when I contribute to the outsiders like research association, national laboratory, any other company, I will not get the deduction under 35. Are we getting it? So here, this is not allowable under section 115 BAA. So we will add back here 2 lakh. Are we getting it? What about the expense towards the in-house R&D?
It's allowed.
Yeah, because this is the contribution for the in-house R&D. So this will get allowed. So no impact here. So this is allowed under section 115 BAA. Depreciation as per books of accounts.
Not allowed.
Correct? Not allowed. So add back. So what is the amount therefore you will reduce here?
40 lakhs.
No, we will add back the depreciation as per books of accounts, 40 lakhs. So what is the depreciation therefore allowed? What is the depreciation?
Additional depreciation will not be allowed.
Correct? So additional depreciation not allowed, only the normal one. Right? Here, no additional depreciation. Are we clear? Then what about the royalty received from patents developed and registered in India?
Same
What will
as
happen?
same as
Same as
normal
normal?
provision.
Correct. So if you see any other income which is there, which is chargeable to tax at the special rates, if you see this last point, then it will be taxable at the specified rates under the Act. But for the purposes of the surcharge will be 10%. Are we clear? So the surcharge will continue to be 10%, even on the special income, right? So therefore, here, what we will do is, we will deduct and add back the expenditure. The same impact.
The same treatment will be given here also.
Yes. Because this will continue to be taxed at the special rate.
Concessional.
Correct.
Okay.
Yes. So here I separately write okay. STCG.
Same
Same
effect.
treatment. Correct. Because this is again taxable at a special rate. Now this will be taxable under the head capital gain. What about the depreciation? We have already considered. What about last one? This disallowance in cash, 11,000. This will be added back, right? Disallowance under 48.3, 13.75 lakh. Here also we will disallow, isn't it?
Yes, ma'am.
Sorry, here it will not come. Huh. AT whether available?
Yes, available.
Correct. So we will calculate here. AT 54,000 was the amount, right?
Yes, it was 50.
Correct. Now what is my total income coming to? Calculate. My business income into 118.25. Total income is coming to 128.25. And net total income is 127.71. All of you getting this? Yes? All of you getting this answer?
Yes.
Correct? So what is my tax liability coming to? $28.0962, right? No, sorry. 1 second. Sorry. I think this is creating some trouble only in the Word file. Okay. Now, what is my tax liability coming to? Yes. On royalties, it will be at the rate of 10%, which is 1 lakh. STCG 20%, 2 lakh, that will remain the same. Is it coming to 23.6962 lakh? Yes or no? Yes? This is what I'm getting as the tax liability. Are you getting this? Why 15%? Siddharth, it will be 22%, right? We are going as per 115B AA. not BAB, because the company started in November 2024. Yes, are we getting the same answer? Yes, please see if you're getting the answer this or not.
Yes, ma'am.
So now which is better? There's a marginal difference, but which one is better? Yes, students, which one is better?
Ma'am, in 115 BAA, the tax liability comes to total tax liability. May I know? It comes to
In one MAT or what you're
uh,
saying?
this one 115 BAA.
BA. Yeah, it's coming to 30.5405 versus this was the normal tax was coming to.
Acha, the other two are correct. The last one, I am somewhere going wrong. I need to check again, recheck. The last one, the last calculation.
1 second.
Hmm.
Last calculation as in?
The normal, the tax under 115 AA, sorry, is 23.6962 BAA, and one may royalties 1 lakh, it will remain the same. And then, okay, fine, I understood. Surcharge will be 22 plus 10 plus 4. Okay,
Correct. Yes.
fine. Thank
What was our normal tax coming to? 30.52. 115 BAA is coming to 30.54. So what is better? Normal tax is better, right? 30.52 is lesser than 30.54. So we will go as per the normal tax provision. Clear?
normal tax provision.
Is this clear?
Yes.
This was a very, very comprehensive sum that, cleared your MAT, that cleared your normal tax versus 115 BAA. Now, this kind of sum is not yet being tested in the exam, but there is always a possibility that these kind of questions can get tested in the examination. Similar questions can also be asked for the individual taxes as well, normal tax versus 115 BAC. Similar questions can also be there with respect to the normal tax, 115 BAC, and when the AMT provision is applicable. Right? So if an individual is doing the business, he may be claiming some 35AD specified business deduction, right? Now, if he claims the specified business deduction, 80IA, 80IB, in that case, the AMT will apply. But if he goes as per 115 BAC, AMT will not be applicable, isn't it? So, therefore, in that situation, you will make a similar comparison. Are we clear? Yes or no?
Yes,
Any
ma'am.
questions? Any doubt? Okay? Yes? Fine?
Ma'am,
Okay.
thank you so
Now,
much for coming up
yes, please.
with this kind of question, which has covered all the possible aspects. Thank you so much.
Yes. So I want to solve one more question on the AMT. So see, with that, we'll be done with the question solving. And then, see, for this particular chapter, uh, we have covered MAT, we have covered the normal tax provisions, we have covered the 115 BAB, we have covered even the AMT, right? Now, rest what is more important in this chapter is the partnership profits, right? So, again, for that, you have to focus on the deductions which are available in respect of the remuneration and interest, and then the AOP and BOI. Again, there could be small questions in relation to the AOP and BOI. So now it is up to you what you want me to do. See, we are left with minutes. Do you want question on 115 BAC AMT and normal tax, or you want to solve the question on the partnership profit. Up to you. Like, whatever you tell me, we will solve that question in whichever area you feel that you are not very comfortable. Yes, which question do you want to solve?
Partnership.
115 BAC, so that is partnership. I can solve only one. So majority will go with that. See, you have solved a question on basically the MAT calculation and that. So it will be more or less the similar question. I can, show you the question. We'll not go with the detailed solving of the partnership one. Okay, we'll try to solve that partnership one because that is from the module. So we'll solve or we'll look at that question from the module. Fine. But we'll solve one question on the AMT. Again, we'll have a prima facie look at that to consider, what kind of questions can be there with respect to 115 BAC. Fine. So let me just share the screen. Mr. Roy was engaged in the business of cold storage and he has given a net profit of 105. He has incurred some capex, 80 lakh for food grain, 60 lakh for sugar and 50 lakh for edible oil on the purchase of land and building. He has capitalized the amount in the books of account. The cost of the land is 120 and this is pertaining to the three business out of the amount of 190 lakh which is given as the capital expense. During the previous year, he has incurred the capex of 45 lakh again for extension or reconstruction of building purchase. The profits from the cold storage are as under. During the previous year, he has also earned some salary for managing the cold storage of ABC Private Limited. He has also contributed to LIC tax saving FD of 1 lakh, medical premium for his wife of 20,000. He has a self-occupied property and which he has purchased through the loan. The interest on loan is 3 lakh. So now what comes to your mind first? See, if you look at it, let me
35 AD.
correct. 35 AD is what comes to mind first. But when we talk about 35 AD, let me show you. Then company, the profit linked deductions, which is in respect of ATIA, ATIB, all of that, other than ATP. And it has claimed the specified deduction under 35 AD, such as business deduction, or under 10AA for SCZ. And if the adjusted total income is more than 20 lakh. Now, what is my adjusted total income? It is the normal total income, which is computed as per the provisions of the Act, your total income. You will add the deduction claimed under Chapter 6A in respect of income other than ATP. You will add back the deduction under 10AA. You will add back the deduction under 35 AD minus the normal depreciation on that capital expenditure. And if your normal tax is less than 18.5% of the total income, then only AMT will be applicable, right? So 18.5% of the adjusted total income is the AMT. Now, AMT is not applicable for the individuals or the businesses opting for 115 BAC or BAD or BAE in case of cooperative society, right? So, here I have put the question here also. First is, here you are saying that okay, 35 AD will be available. But to which business 35 AD will be available? So if you see the question
Food
which is
grains
there,
and sugar.
they are saying that he is in the business of cold storage. Yes. So which business? Food grains, sugar or
Food
edible oil?
grains and sugar. Food grains
Sorry?
and sugar.
Food grains and
For
sugar.
food grains and sugar. Yeah.
Is it available for sugar also?
Yes, ma'am.
Yes.
For storage of sugar also available.
See, storage of sugar, here it is available. It is not available for the business of the edible oil, right? So 35 AD is available in respect of these two businesses, which is the agricultural produce basically, right? So one is in respect of the food grains that you have, and secondly the sugar which is there. So in these two businesses, you will get the 35 AD deduction. Now, how do you calculate, students, the 35 AD deduction? Yes. What is the deduction available for? What will qualify for deduction?
100% revenue expenditure and capital expenditure में land and uh,
Yes. So, deduction of the 100% revenue and 100% of the capital. See, revenue is any which was available under your PGBP, right? There's no problem. But what is 35 AD talking about is, it is, yes, Siddharth, it is talking about 100% of the capital expenditure in respect of the specified business, which is setting up a warehousing facility for storage of sugar and for the storage of the agricultural produce. Right? So 100% of the capital expenditure. Now, the capital expenditure which should be there, right? The capital expenditure which is there, now this capital expenditure should not include the land, goodwill or the financial asset. Right? Let me take you towards your module itself. This is a question from module. But in module, there is no mention of calculating the tax liability. I have added one more point over there, right? So these are the list of specified business. So 100% of the capital expenditure, which is solely and exclusively for these businesses, will be allowed as deduction under 35E. Revenue तो वैसे ही मिलता है. Capex is not available as a deduction, but 35E is allowing you the Capex. But what is not allowed? Expenditure on the acquisition of any land, goodwill or financial instrument, and any expenditure in cash over rupees 10,000. Are we clear? So, expenditure which is current year plus the expenditure prior to the commencement of business is also allowed. So, prior to the commencement of business, any revenue or any capital expenditure, if it is capitalized in the books of accounts, it will be available. Are we clear? So, now if you look at this question, it says, Mr. A has commenced the operation of business for storage of full grain sugar and edible oil. He has incurred a capital expenditure of 80, 60 and 50 lakh on the purchase of land and building during the January to March only for the above business. And this is capitalized in the books of accounts. So expenditure prior to commencement of business, this is capitalized as on 1/4/2024. Will you get this expenditure? Yes or no?
yes ma'am.
Correct, you will get it. But this includes the land expenditure. So what you will do is, from this capital expenditure in respect of food grain and sugar, 80 and 60, from that we will reduce the cost of land 50 and 40. Are we clear? So what will be the eligible expenditure that I will get is 30 lakh and 20 lakh. So if you see here, with respect to computation of the income from the specified business, I will get the capital expenditure incurred prior to 1/4/2024, which is 30 lakh and 20 lakh. Right? Yes or no? Fine? Is it clear? So this is the capex which will be allowed. Now, during the year also, he has incurred the capital expenditure of 20, 15 and 10 lakh. What will happen to that? What will happen to that?
Allowed ma'am.
Correct? So 20 and 15 will get allowed, but not 10, which is with respect to the edible oil. For edible oil, you will not claim the capital expenditure, right? You will claim the depreciation on that capital expenditure for edible oil. isn't it? For edible oil, you will not get the deduction of the capex. But what you will get is depreciation on that particular capex. Because this capital expenditure is for the extension or reconstruction of the building purchase. So if a capital expenditure is incurred for the extension or improvement of the life of the asset, it will be capitalized in the building as per ICDS 5. If it is capitalized in the building for the edible oil, you will get the depreciation on this 10 lakh. Are we clear? Yes? Now what are the profits? Profits which are given are 16, 14 and 31. So we'll take 16 and 14 for food grain and sugar, and we will arrive at the deductions which are available for the prior period capex plus the current year capex. So 100% of this total capex will be allowed. Now here I am getting a loss. I am getting a loss from the specified business. Can this be set off against the income? Yes. Can this be set off against the income of the normal business? No.
No.
This cannot be set off
cannot
against
be.
the normal business. Yes. So you write in the note, if you see here, they have given in the note that the loss can be only set off from the specified business. So therefore, this cannot be set off against the normal business income. This can be carried forward indefinitely, provided Mr. A files a return of income before the due date as specified under 139. Are we clear? So you will write this note in the exam. Now what is the profit from the normal business? 31 minus the depreciation. So what will be the depreciation on? Depreciation will be on the building, which is 50 lakh, minus the land value, which is 30 lakh. So it will give me 20 lakh plus the current year 31 lakhs. Sorry, current year 10 lakhs. And on that, I will calculate the depreciation, and from that, I will arrive at the profit of 28 lakh. Are we clear? Yes or no? Any question, any doubt?
Yes, ma'am.
Okay. Now, if I have to apply the AMT over here, how will I do that? So, if I have to apply in the same question, now the question says calculate the tax liability. So, you have calculated the normal tax. So, normal tax will be, what will be the normal tax? Please tell me the slab rate. What will be my normal tax? Yes. What will be my normal tax here? On 28, what is the tax coming to? Is an individual. Can we claim deduction under 35 AD if the return is filed as a belated return? That's a good question. Yes, can we claim that?
No. No, ma'am.
So whether the section tells you that specifically? Yes. So if you look at the 35 AD per se, that is not anywhere mandating you to file the return of income on time to claim the deduction under 35 AD. Right? So that is not telling you that you have to claim, but if you have to claim the loss, then yes, you need to file the return of income on time. Are we getting it? So if you have to claim the loss with respect to specified business loss, then yes, you need to file the income tax return on time. Otherwise, whether 35 AD mandates you, the answer is no. There is no mention with respect to that. Are we clear? Yes. Now, what is the total income coming to, tax liability coming to on 28?
6,52,500.
6 lakh This is with cess or without cess?
Without cess.
Tell me with the cess and surcharge, whatever it is. No, there's no.
Which says 6,78,600.
Okay, now coming to the AMT. How will you calculate the AMT over here? So we'll start with the net profit. Sorry, not net profit. We'll start with our total income. One second. So see, in this question, in the ICAI question which is there in your module, there is no mention about this LIC, medical premium, self-occupied property. This I have additionally given just to, make a comparison between 115 BAC. But I'm not considering for this moment here because we are just, quickly solving the question. But, you can always consider because these are very simple like deductions which are there, right? These will not be available obviously under the 115 BAC. Even the interest on the self-occupied property, this is not available under 115 BAC, right? So this you can easily, make a comparison. But right now I'm just more focused on calculating the AMT. So we'll start with the
AMT
total
as well.
income. Yes, so 28 lakh was my total income here. Now, its AMT provision says what you have to add back is you have to add back deduction under 35AD. So what is my deduction under 35AD? What is my deduction under 35AD? This is coming to this amount, 85, isn't it? So I will add back 85 less depreciation under section 32. Now this is the notional depreciation. Right? So if I am adding back the deduction, I am not allowing the deduction under AMT, but depreciation तो फिर भी मिलना चाहिए ना. See, deduction is I'm adding back, but if I didn't get the deduction, I would have been still eligible for depreciation on this 85 lakh, right? So on this 85 lakh, 10% is a notional depreciation which I will reduce. Are you getting this logic? Yes or no?
In any case, depreciation can be claimed. I mean,
Correct. So if I'm not allowing the 85 as the specified deduction, I would have still allowed the depreciation. So that's the reason why I'm reducing it. So 104.5 lakh is the AMT which is coming into 18.5%. This comes to 19.3325. Now this is more than 1 crore, right? This is more than 1 crore. So there will be obviously surcharge. What is the surcharge more than 1 crore for individual?
15%.
Correct? So 15% surcharge plus my cess at the rate of 4%. So my total AMT liability will come to 12 lakh. For rounding off, I'm considering this. Is it more than my normal tax? Yes. So obviously, AMT will apply. Right? So obviously, AMT will apply. Yes or no? Now, compare it with 115 BAC. Now 115 BAC में you will have net profit of, income of oil. Plus you will calculate the total income of food grains and sugar. Now, how will you calculate? So you will consider the profit of food grain. What is the profit of my food grain? 16, right? So this I will consider minus the depreciation on the capex, right? So on the building, I will claim the depreciation. So instead of I getting the deduction of 50 as the 35 AD, under the 115 BAC, I will not get the deduction of specified business. 35 AD will not be available under 115 BAC, but I will still claim depreciation, right? So this will be 11 lakh, right? Same profit from sugar. How much is it? 14. Is everybody following this? Yes or no? Are you following this or not? Yes?
Yes, ma'am.
So profit from sugar was, 40. Less depreciation on building. How much is it? 35. So 10% of 35 lakh. 3.5. So 14 minus 3.5 is 10.5. So my GTI comes to 10.5 plus 11 plus 28. 49.5. Now calculate the tax under 115 BAC. There will be no surcharge. What is it coming to? Yes.
Eleven lakh 90,800.
11,90,800. 1 second. So this will be with surcharge. Oh, so this says,
Yeah, including cess.
okay. Now see, this is lesser than your AMT liability. So if you go as per the normal tax, the AMT will apply and then you'll not be able to claim the deduction and you'll have to go as per the AMT rate, right? So it is better that we go for 115 BAC because the tax here is less than the AMT. So this is more beneficial. Are you getting it? Yes? Yes or no, students? Is this question
Yes,
clear to
ma'am.
everyone?
Yes, ma'am.
Fine. Okay. Last question on the partnership profit. Again from your module. So this is how you have to even prepare for the exam. Just 2-3 questions. With that, you will revise your provisions also, and you will have a practice of question during the last day of the examination. Okay. X, Y, and Z represented HUF of Z represented by Z are partners with equal shares in profit and losses of Popular Vision, which is engaged in the production of TV serials and telefilms. Earlier partnership deed did not authorize the payment of remuneration or interest to partners. The partnership deed was revised by the partners on 1st June 2024 to authorize the payment of remuneration of 1 lakh per month to each working partner and simple interest at the rate of 15% per annum on partners' capital. X, Y, and Z are actively associated with the affairs of the firm. The profit and loss account of the firm is showing a net profit of 10 lakh after debiting and crediting the following item. First one is interest amounting to 5 lakh, which was paid to partners on the balances standing to their capital account from 1st June 24 to 31st March 25. Now, what will be the effect of this?
Added back.
This you will add back. Why? What is the reason?
Recording in progress.
Right? So here the interest in excess of 12% will get disallowed. So not the entire 15% will get disallowed. The excess interest, which is 12, 15 minus 12, 3% will get disallowed. How will you calculate 3% over here? How do you calculate 3% over here? Yes. Simple mathematics.
It's 5 lakhs multiplied by 15 divided by 12.
No, 5 lakhs into 12 divided by 15, isn't it? This is 15%. So what will be 12%, right? So 5 lakh into 12 divided by 15 it will be, right?
Cross multiplication.
Yeah, it's just a cross multiplication. 5 lakh is 15%. So what will be my 12%? So 5 into 12 divided by 15, isn't it? So that way you will get the disallowance with respect to the 3. So 5 lakh into 12 divided by 15 if you will do, you will get the allowable amount. What you have to find is 5 lakh into 3 divided by 15 if you do, you will get the disallowable amount, isn't it? Right? Because 12 is something which will be allowable, or you find out the difference. So 5 lakh into 12 divided by 15, if you take, so it will come to 4 lakh. So 4 minus 5, 1 lakh will get disallowed. Clear? Yes or no? Oops, sorry. I think I just closed the module mistakenly. Okay. Next is remuneration to the partners, including the partner in representative capacity, 30 lakh. What will happen to this?
It
Disallowed.
Disallowed?
Not allowed.
It is allowed, right? So the remuneration to the partners, this 30 lakh. Now, here you will have to find out as per the limits which are given under 40B. Isn't it? You have to find out as per the limit. So first you will have to add back. Yes, Siddharth. And then you have to separately consider under 40B. You can't straight away allow it. You have to first calculate the limit, right? On the first 6 lakh, it is how much? What are the limits which are given? What are the limits which are there under 40B?
On 3 lakhs, it is 90%. And balance 60%.
Yes. So what you do is under the partnership profits, you have to calculate the limit, right? So as per the limit, only then you will be able to calculate whether this is allowed or not. So on the first 6 lakh, it is 3 lakh or 90% of book profit. It's not on 3 lakh. It has been amended this year. Right? So 90% or 3 lakh on the first 6 lakh, or in the case of loss, it is 3 lakh or 90% of book profit, whichever is higher. Balance, it will be 60% of profit. Fine. So you will have to find out the book profit, which is your net profit as per the PGBP. You will not reduce any brought forward losses, but you can reduce the unabsorbed depreciation, because the unabsorbed depreciation is considered as the depreciation of the current year. Right? Another question is, will remuneration be allowed to Z because he is a partner in a representative capacity? Will it be subject to the limit of 40B?
No, ma'am, it's allowed.
It is disallowed or allowed?
Allowed, ma'am.
It is allowed. So even though Z is a partner in a representative capacity, right? But he is still a partner. Therefore, remuneration to Z is also subject to the limit of 40B. Are we clear?
So it will be considered
It will be considered for the purposes of the 40B. So where an individual is a partner in a firm in a representative capacity, the provision of 40B shall not apply to any interest paid by the firm to such partner in his personal capacity. That is the provision. But when the remuneration is paid to the partner in a representative capacity, it will be subject to the limits of the 40B. Are we clear? So what does the provision here provide for? That the payment which is paid to a partner, right? It should be in respect of the partner who can be even in a representative capacity. Now here ABC HUF is a partner and Mr. Z is representing the HUF as a partner. So any interest paid on loan by the firm, right, to the partner in representative capacity, any interest paid on loan by the firm or by the HUF to the firm, or by the firm to the HUF, that if it is paid to the partner in representative capacity, that is also subject to 40B. But if the firm is given the loan, if the firm is paying the interest to the partner in representative capacity who is there, I am paying the interest in his personal capacity. Right? That is not subject to 40B. So the provision is with respect to the interest. Are you getting it? Here they are talking about the remuneration. Clear? So if it is remuneration, that will still be subject to the 40B. Are we clear?
So there is a catch involved when it comes to interest.
There's a cap. Correct. Correct. So that we will consider, but for now we'll just disallow this 30 lakh. And you will write a note that the remuneration to the partner in representative will also be covered by 40B. Next is interest amounting to 2 lakh paid to Z on loan provided by him in his individual capacity at 16%. This is what I told you. Whether this will be subject to 12% now and you will disallow the balance 4%.
No, ma'am. Here allowed fully.
Correct. Because this interest is being paid in his personal capacity.
Individual
He has given the
capacity.
loan, yes, in his personal capacity. So here you have to only assume that the provisions of 48.2 do not get attracted in this case. If 48.2 gets attracted, then you will take the FMV. But here you will write this point, assuming that the provision of 48.2 do not get attracted in this case, interest shall be allowed as a deduction and it will not be subject to 48. Are we clear? Yes? Now, if the question says that, let's say, for example, if Z is a partner in a firm, he's not, or X is a partner in a firm, and his wife has given the loan to the firm, but the wife has asked not to pay the interest to me, but to X only. Then in that particular case, whether 40B will be attracted in the hands of X? Answer is no. Because who is giving the loan is important. So interest was paid to or payable to the wife. But wife is saying don't pay to me, pay to my husband. Now what will the husband do even if he is a partner? 40B will not be attracted in that case. Are we clear? Yes?
Yes, ma'am.
Okay. Now coming back to the next point. Royalty of 5 lakh paid to partner who is a professional script writer for the use of his scripts as per the agreement between firm and X. Same is authorized by the partnership deed. What will happen to this? Will it be subject to limits of 40B? Yes. Is it subject to 40B? It will be. 40B says payment of salary, bonus, commission, remuneration by what we call. Let me open up section 40B for you. Look at the wording of the section. See, any payment of remuneration to any partner. Sorry, not this point. Yeah. Any payment of salary, bonus, commission, remuneration by whatever name called. It is saying salary, bonus, commission or remuneration by whatever name called. So this will include the remuneration by whatever name called. Now royalty which is paid is a remuneration, right? For his or being a script writer. So remuneration by whatever name called will be subject to the limit of 40B. Are we clear? So this will be subject to the limit of 40B. Clear? So this will also be added back. This will be disallowed. Next one, two separate payments of 18 and 15 made in cash on 1st February to Altaf, a hairdresser, against his bill for services rendered in January 2025, and two payments of 19 and 10 made in cash on 1st February and 2nd February 2025 respectively to Priyam, an assistant cameraman, against her bill for services provided in January 2025. It's a very simple adjustment. What will happen? Will you disallow?
Yes, whole rupees 10,000 disallowed.
Yeah. So 18 and 15 in cash to Altaf shall be disallowed since the payment is more than 10,000. Right? Single day to a payment to the Cameraman, assistant cameraman is also disallowed since the aggregate payment has exceeded
10,000.
10,000. Correct? So both of the payments will get disallowed. Clear? Very, very simple one. Next is, so 19 will get disallowed, 18 and 15. And this 10, whether this will also get disallowed?
Ma'am, it's allowed.
This is allowed because this is made on the 2nd February. What is made on the 1st February is 18 and 15 together and 19 on 1st February. Fine. So 10 will be allowable. Fine. Yes, Siddharth. Correct. 18 plus 15 plus 19. Amount of 5 lakh provided in the books on 31st March 25 is liability for remuneration to Shreya, a film artist and non-resident. Tax deducted at source from the amount so credited was paid on 3rd June 2025. Allowable, disallowable?
Yes, ma'am, allowable because before return filing date it is given.
Correct. So before return filing, it is there. Return filing for the firm is either 31st July or 31st October. But this is paid in on 3rd June. So this will be allowable since tax has been deducted, right? If tax is not deducted, 100% of expenditure is disallowed since it's a payment to a non-resident. If it is a resident, then 30% disallowance. Fine. Amount of 6 lakh provided as gratuity for the year on the basis of actuarial valuation. Gratuity actually paid to one retired employee is 1.5 lakh. What will happen?
The provision is made of 6 lakhs and actual payment comes to 1.5.
Yeah.
So the differential amount should be made taxable.
Correct. So only 1.5 lakh is allowed. Provision for gratuity, even if it is based on actuarial valuation, is disallowed as per section 40A(7). So 6 minus 1.5 will get disallowed. Fine. Last one, interest of 1.2 lakh received on income tax refund in respect of 24-25.
Not allowed, ma'am.
Not allowed as in, how will you tax this? Whether this is taxable or not.
Taxable.
It is taxable, but whether under PGBP?
No, income from other source.
Correct. So you will reduce it and put it under income from other sources. Now, if you see the computation over here, this is my net profit as per PNL, 10 lakh. Here we have disallowed interest in excess of 12%. We have disallowed the cash payments. We have disallowed gratuity. We have disallowed the partner remuneration and royalty. Less interest on income tax refund. And we have considered it in the income from other sources. Fine. Now, based on this profit, the book profit this you get after the interest on income tax refund deduction is within that you will calculate the limits under 40B. So on first 6 lakh, 90%, on the balance 60%. So this comes to 32 lakh 89,200. What have we been paying to the partners actually is 1 lakh for 10 months from June to March, right? Into 3 partners plus the royalty of 5 lakh, which comes to 35 lakh. So what is deductible is this amount. So 32 lakh 89,200 we will reduce and we will get to this income from the PGBP. Are we clear, students? Yes?
Yes, ma'am.
Fine. So see, we have covered the 3 topics with respect to the this particular chapter, assessment of various entities. What additionally you need to do is you need to calculate the or you need to do the sums with respect to the AOP and BOI. There are sums with respect to that. There is a specific rebate which is given under section 86 with respect to AOP and BOI. Do those kind of questions as well from your module, from the practice manual which is there, right? And solve those questions and see. In case you have any questions, please feel free to ask me. Can I give the brief overview of 115 BAC? I can give it now only, Siddharth. So 115 BAC is the tax with respect to the individual concessional rate, right? You need to follow the slabs. This is the default rate unless you opt out of that particular regime, right? If you do not opt out, that will be the governing regime where there again the same deductions, exemptions which you are not able to claim under 115 BAA, BAB, same are applicable even for the business. Right? Other than that, you can't claim the HRA, you can't claim the food coupon allowances, you can't claim the LTA deductions. You can only claim the the conveyance allowance, travel allowances which are there, right? For the handicap. So exemptions in respect of salary you can claim. You have the standard deduction of 75,000. You don't get entertainment allowance, right? You can claim the interest on the rental property, but not on the self-occupied property, right? So these are the only deductions or the exemptions which are restricted under 115 BAC. Other than that, the 115 BAC for the PGBP side, the exemptions and disallowances which are there under 115 BAA same exists. 35 AD, 33 AB, additional depreciation, all of that you can't claim. Specified business deduction, nothing. 80 AAA will also be available over here, even under 115 BAC, right? So, and these are the same points which are there in the 115 BAA also. And additionally, here under 115 BAC for the business income, you can the option once. But for the other income, if you have, you can opt in and opt out every year on year. Fine. Any other question?
Ma'am, cooperative societies, some are not there in study material. 115 BAD and BAE. Can you explain us?
115 BAD and BAE. Yes, of course I can. Yes, 1 second. 1 second. Let me just share that screen. Is the screen visible?
No, ma'am.
1 second.
In study material, there is not a single sum on that.
On 115 BAD and BAE. See, the sum is again, going to be the same. I'll tell you with respect to that as well. With respect to cooperative society. See. Yeah. So the normal is a slab rate. Optional is, 115 BAE, which is 15%, which is similar to 115 BAB. Same provision. It's nothing different. For other than manufacturing cooperative society, it is 115 BAD 22, which is same as 115 BAA. Other income will be taxable at the specified rates, right? Now, question here can be with respect to that, when you're claiming the ATP deduction. Because if you claim under 115 BAD or 115 BAE, what you can't claim is the chapter 6A deductions, right? So deductions which are other than ATJJAA is only available. Other than that, you can't claim any deduction, which will also include your ATP. So if a question will be asked, we will have to solve it same way what we have solved it in respect of the 115 BAA. Right now, what we have done it. So here for a cooperative society, they may claim ATP deduction. So ATP will be there. But if you claim ATP be applicable, will AMT be applicable? When you claim ATP, will AMT be applicable for a cooperative society? Answer is no. Now
Recording in progress.
Right? So if you claim ATP as a cooperative society, AMT will not be applicable. Right? And therefore, then you will only compare with respect to without ATP under 115 BAE or 115 BAD. Are we clear? Yes or no?
Yes, ma'am.
Okay.
Ma'am, can you just move the screen a little bit up because the division that you have made for cooperative society, I mean, in normal and within optional, it works in the same way like in the case of
Company.
okay.
Only for the company, see, MAT is applicable. Here, if a cooperative society has the ATP deduction, which is the major deduction which the cooperative societies claim, then as I told you here, ATP may AMT is not applicable. So if you see this, I have written also deduction under chapter 6A other than ATP. So AMT doesn't apply to ATP. Are we clear? Okay, any questions? Yes or no? Fine?
Yes, ma'am. Thank you.
Okay. So thank you so much, students. I hope this session was useful to you. And if you have any
Yes,
feedback,
very
please,
much.
very much. Yeah. So that's what, is the intention of solving these questions so that, you get to learn. That is the only intention of these revision classes. Now, for the next chapter, again, we will be solving a full-fledged sum on the taxation of the trust, which will, clear your trust concept as well. We'll solve one question on the REIT as well. So please do come after revision only, right? Revise and do come for the class. Thank you so much.
Yes, ma'am. Thank you.
Thank you so much, ma'am.
Yes.